Hi, everyone, and welcome to this week's episode of Money Moves. Every Sunday, I talk about the most important economic news of the week. And this week's news is the stock market is flashing a warning sign. And then I go over each of my investment accounts, starting with Worthy Bonds. Then I will go over my taxable lending club account, as well as my IRA. I will go over my Fundrise account, as well as my M1 Retire account, and my higher yield savings account. And lastly, for my investments, I will go over my active options positions. To close out the episode, I'll go over my overall financial position. And of course, my week-to-week tracker. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning the Black Swan yacht, or if you want to be part of a well-educated financial community, definitely like and subscribe. It has granite countertops and a built-in grill, and a hot tub and outdoor dining space. The master suite is gorgeous, and it's currently on sale for $10.8 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at the S&P 500 for reference, it was down 2.39% on the week. On Tuesday the 2nd, we had a high point, and then on the 3rd, we downtrended basically all day. And then on the 4th, we were essentially flat overall. Looking at the article for today, the stock market flashes warning signs. They say the meteoric rise of the stock market is unsustainable, and companies like Tesla roughly equal the market cap of JP Morgan Chase and Citibank combined. Apple recently surpassed $2 trillion in market cap, which is more than the entire Russell 2000. These high market levels are a clear illustration of euphoria in the financial markets. And then this week, the Nasdaq fell 5.8%, with companies like Zoom and Peloton falling even more. Amazon fell 5%, although it remains an incredible 82% on the year. One of the early warning signs that the market was going to drop is that the VIX was going up, even though the S&P 500 was making new highs. The VIX is the volatility market and usually goes down as the markets climb steadily. However, the fact that the VIX was going up along with the S&P 500 is usually an indicator that there will be some kind of a correction in the near future. For reference, you can see here, we were at pretty stable levels around 12.5, and then as the market was hitting 3,600, it was up over 25. So basically this is saying the volatility doubled when the market was right at its highs at 3,600 for the S&P 500. They state the point that I was making earlier. Usually the VIX stays low as markets go higher, but in this case, the market was going higher along with the volatility. The VIX is currently at 33 after hitting an all-time high at 86.69 on March 16th, which was a few days before the market bottomed out and started this recent climb. They then state that it made sense that the VIX was going straight up because the S&P 500 as well as the rest of the markets were falling the fastest they ever have. Another factor that's been driving up the markets is the vaccine hopes, as well as the Federal Reserve. The Federal Reserve slashed their rates to 0%, as well as purchased trillions of dollars worth of bonds and promised that it would continue to do so as needed. That, in combination with the fact that investors believe that a vaccine will be publicly available before too long, underpinned the 5-month rally. The fact that the VIX is up despite the Fed policies is pretty unusual. Usually when easy money is available, volatility is lower. However, that doesn't seem to be working on the markets anymore. The alternative to this, which seems more likely to me, is that this is just a short-term fear bubble that is entering the markets, and by rule, fear is usually overstated. Another factor that could be affecting the markets is the pre-election jitters. As we've talked about, the VIX represents the volatility in the markets, and this election in particular seems to be a little bit more controversial than normal. As investors become more and more fearful of the overall election, traders have spiked the VIX futures contracts in November. This simply means that investors think the VIX will go up right around the election period, and we could be seeing the beginning stages of that now. Comment down below what you think the most important factor for the market is today, and whether you think this drop is going to be long-term or if this is simply a short-term dip. Moving on to Worthy Bonds, I received $11.73 in interest this week, which is on par with what I see every single week. And weeks like this one is where these investments outshine the markets. With the market being down over 2%, it's nice to see at least your bonds going in the right direction. Looking at the investment report, that interest makes sense as I receive about $10 every 7 days. If you're interested in a stable 5% return that compounds daily and is fully liquid at any time, There is a link in the description that will get you one free bond worth $10 when you fund your account. Moving on to my taxable lending club account, it went down $19 this week, and that's because I had 2 notes that were officially charged off. They moved from the default category to the charged off category, which means they are no longer associated with my account. I had 3 notes go into grace period, and 2 of those moved into the 16 to 30 day late period, and 2 of the 16 to 30 days moved into the very late category, which is pretty on par with the current trends. I invested in A and B note loans for this account, and looking at the term, I'm right at that 75% 60-month loans, which is the goal for this account. My weighted average went down by 0.01%, which means I'm getting a little bit more conservative with my loan picking. As you can see, my net adjusted return is still over 10%, which is far above average for Lending Club. Moving on to my IRA with Lending Club, this one went down $9, and that's mainly due to the 8 notes that are currently in grace period, which is up 7 from last week. This is a pretty common phenomenon for notes to go into grace period over the weekend. I think it has to do with their processing, and usually they're processed on the first business day of the next week. I focused almost exclusively on A notes for this account, again, which brought my weighted average down by 0.05%, which hopefully over the long term will improve my returns. Looking at the term, I continue to get closer and closer to that 50-50 split, which is my goal currently for my IRA. As you can see, my IRA is still over 30%, which is absolutely crazy for Lending Club, and I still suspect that this will come down in the future years. Moving on to my Fundrise account, I'm actually falling a little bit behind my goal of $650,000 by 2040. They're currently projecting $645,000, which obviously is still good, but I would like to keep it on track, and I might have to invest a little bit more to keep up with that goal. This account went up $9 over the course of the week. Similar to worthy bonds, these are the kind of investments that are good to have if the market continues to go down. Moving on to my M1 Retire account, I'm down 1.28% for this week, and I received $7.83 in dividends, and that percentage outperformed the market by about half. If you remember at the beginning of the episode, I mentioned that the S&P 500 went down almost 2.4%. And I think this is due to the fact that I am less invested in tech with this account than the S&P 500 is, which is pretty heavily concentrated in those top tech stocks right now, which allows me to outperform on days when it's down. And tech was most affected by the recent downturn, as it has been the highest flying sector in recent months. Looking at the individual holdings, you can see tech was down over 3% individually, which was the furthest down out of all the categories. Most sectors were down, but not quite as much. And then utilities and real estate were both up this week. Looking at dividends for this week, short-term government bonds was paid, and I also paid the interest on my M1 Borrow account. Visa, Pfizer, and Aflac all paid out this week, which totaled a little bit more than $7. Moving on to my higher yield savings account, it was down only 0.19%, which is basically flat on the week, and I received $17.10 in dividends. Looking at the holdings, the Vanguard Dividend Appreciation Fund went down less than the overall markets. All of the bond funds were basically flat, if not up a little bit. And then real estate, Realty Income was up 1.84%. Looking at some other dividend funds that I have, they all outperformed the S&P 500, which is expected when the market is down, but they don't tend to go up quite as much as the rest of the market on up days. Which if you follow along with my channel, you would know that my higher yield savings account is really built for this specifically. I don't want it to go down quite as much as the rest of the markets, and I do sacrifice a little bit of those gains in order to have that stability. Looking at the activities for this week, you can see I also paid M1 Borrow for this account, and then I received a bunch of dividends from various bond funds, and as I've explained in the past, each of these bond funds have bonds from various companies, and they all pay out individually, which is why you see multiple payments from funds like VMBS. Moving on to my active options positions, this week I was down 3.54%, which makes sense because options tend to be a little bit more volatile than the overall markets, and I'm also more heavily weighted towards tech right now in terms of the options that I'm trading. So on the morning of September 3rd, we saw that big time drop, and then on the morning of September 4th, we saw another big time drop, but we recovered, finishing up basically unchanged on the last day of the week. Looking at my specific positions, Simon Property is up $302, which makes sense because real estate did go up this week. Yeti was basically flat. Ford was basically flat. Amazon, I'm down a little bit, but I've been in this position for a while and it didn't drop below where it was before when I took this position, and I will likely continue to hold it until I see the profit of around 50%. GOLD is up $7. Uber is still up $25. Facebook didn't drop quite as much as the rest of the tech stocks, and that position is still doing fine. AMD dropped quite a bit, but again, a lot of these tech positions that I established or either rolled this week are not doing nearly as badly as their overall markets, which is why I'm only down 3.5%, and I could be in a much worse position if I had made bad decisions during this down week. Carnival Cruise Line was up all week, and I locked in some profits with that position. The biggest loser here for this week is Apple. This position is down $386, and the stock is right at $120, which is my strike price. I think it'll be interesting to see what happens to Apple over the next few weeks, whether this is a short-term drop or a potential for something more long-term. And lastly, for my investments, looking at my Tastytrade account, my largest losing position is Netflix, but if you look at the break-even point, it's right around $457 per share, and the stock is still at $516 per share. So I'm not really worried about this company becoming a losing position right now, but I will continue to monitor this position. Everything else is continuing to do well. Bank of America actually recovered quite a bit this week. Carnival Cruise, like I said, rallied. Ford stock was basically flat. Netflix was down a little bit. Peloton, this is a short-term options position, and my break-even point is below $69 per share. It's currently at $80 per share, so I'm not super worried about this one either. The Qs still have a ways to go until I hit my break-even at $254 per share. Snapchat actually did pretty well versus other tech stocks in retaining its value, still at $22.44. And my put position is at $21 per share. So this one is still doing fine. And then S&Ps have a ways to go before I'm in a losing position as well. So overall, my Tastyworks account is actually doing a little bit better. And that's because it's less weighted towards tech and more towards the broader market, as well as some non-tech stocks. Looking at my overall financial position, I did manage to go up just a little bit, and that's mainly because I got paid this week, which offset most of my market losses. I'm only up around $40 on my net, so almost my entire paycheck was wiped out by market losses. Moving on to my weekly tracker, you can see that stocks were down just a little bit this week, as well as my trading accounts. My cash went up because I got paid, and everything else basically stayed flat. My net gain for this tracker was over $30. So overall, not too bad for a pretty substantial drop in tech stocks. Let me know down in the comment section what you think of this recent market drop. Is it going to continue, or is this a short-term drop due to the outstandingly fast rally? Let me know if you have any questions on any of my investing platforms. If you like any of them, there are links in the description that get you some free stuff when you sign up with them. Definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. Today's jelly is the Jabberwockies' performance at the NBA Finals in 2017. If you are familiar with them, you know they are amazing dancers, and they've been around for quite a while. So here's what that looks like.
As I combine all the juice from the mind, heal up, wheel up, bring it back, come rewind. I bring it. Powerful impact, boom from the cannon. Now bragging, try to reap a mind, just imagine.
As you can see, they are amazing dancers. They kind of blend locking with a little bit more fluid motion, and they are extremely well choreographed. Let me know down in the comment section what you think of this video. If you want to watch the full video, there is a link in the description. Definitely like and subscribe before you go, and have a great day.